Hi, it's David Worrell, your DIY CFO. And in case you are just getting started with PPP loan forgiveness, I want to give you a quick overview and update. Today's May 20th, 2020. That's 5/20/2020. That's a lot of 20s. This is going to go really fast, but I wanted you to know that it is up to date for as much as we know after the loan forgiveness application form was published over last weekend. So let's get started. Hey, I think it's really important to remember what the PPP was. So if you don't remember, it's a loan. It was based on 2.5 months of payroll. One per customer came from your bank, and you were guaranteed no payments for 6 months. Well, you already know that's a weird formula because 2.5 months of payroll as a loan now is meant to be spent in 8 weeks. So if you didn't know that, now you do. The day the money lands in your account, you've got 8 weeks, 56 days to spend all that money if you want it to be forgiven. So we know a little bit about this. We know that you're supposed to spend at least 75% of it on payroll. The other 25% can be spent on rent and utilities. So here's how to spend the money on qualified expenses. First qualified expense is payroll and benefits. Now, you know that it's called the Payroll Protection Program after all, right? They want you to spend at least 75% of your loan or on the forgiven amount on payroll. There's some caps. Nobody can be paid using PPP money for more than $100,000 annually or an annual run rate. During the 8 weeks that you've got to pay the PPP money, that means you can't pay any employee more than $15,360 with the PPP forgivable funds. In other words, you can't claim more than $15,360 of forgiveness for any one employee. That's 8 weeks of $100,000. So you may claim gross wages up to that $100,000 run rate. You can claim the city and state taxes that are paid by the company. And typically that means SUTA, S-U-T-A. That's the state unemployment taxing authority that purchases your unemployment insurance in case you fire somebody. Anyway, you are allowed to put SUTA into this bucket of qualified expenses. Also, the health insurance premiums that you pay as a company and the retirement plan matches that you pay as a company. Now, that's for your employees. If you're an owner of a company, you got something a little bit tricky to do here. First of all, if you're a sole proprietor, that means the company does not file income tax by itself. You do not get what's called a K-1. You do not get a 1099. You get the profits of the business written and the expenses of the business also written up in your personal tax return called the Schedule C. If that's what you do, your work is done here. You can stop watching this video now because people are going to look at your 2019 tax return, divide the profits on Schedule C by 52 weeks for the year of 2019, multiply by 8, and that's what you're going to qualify for as owner's pay forgiveness. Okay? Very good. If you're not a sole prop, if you're a partner in an LLC, a member of an LLC, a partner in a partnership, a stockholder in a corporation, any of those things, then you may pay yourself the lesser of 2019 wages for an 8-week period, or what you actually take during this period. Of course, it's always capped at $100,000 annualized. So that's, again, $15,380 would be the most that you can take and claim for yourself as a qualified expense. Okay, don't forget that includes, for an owner, that includes all compensation, W-2, that's payroll, profit, meaning profit on a K-1 or a partnership distribution, or any kind of distribution or cash that you take out of the business. You can roll all that together and put that into this little formula. So we said there were 2 buckets of money. The first big bucket is payroll and benefits. The second little bucket is rent and utilities. So let's talk first about rent. That, of course, means office rent, but it might also mean copier leases, vehicle leases, machinery leases. I know a construction company that's writing off the lease on a bulldozer at $20,000 a month. That's pretty cool. And I think it's entirely appropriate and legitimate to write off the leases if they are operating leases. Now, that's esoteric and you might want to look that up, but an operating lease is different than a capital lease. They're not purchasing the bulldozer. Technically, they are renting it. And I won't get into the difference between operating and a capital lease, but if you are renting anything, your office space or a bulldozer or a car or a copier or a computer, we believe you can write off the entire amount of that rent during the 8-week period. Uh, Also, the interest from mortgages or other loans for personal property. So those are not the operating leases, but these are the capital leases or the things that you are purchasing, including the building that you work in. You may be able to write off the interest from those loans during this 8-week period. Okay. The utilities portion of this is the amounts that you pay during this 8 weeks for water, gas, electricity, internet, and telephone. Sorry, I didn't put telephone on this slide. Telephone's a big one. Your cell phone, anybody else's cell phone that you pay for, can be considered a utility. And transportation is the next one. We think that means gasoline. We're not sure if it means the reimbursed mileage for employees. We think that that does not count. But transportation is an odd one. Perhaps you buy a bus pass for your employees, or maybe you've bought gasoline for your fleet. That could qualify. Okay. Security and trash services on a monthly basis, maybe. We've heard in one FAQ that the SBA put out that those would be considered. We didn't see it in the final guidance, but we assume that security and trash might be. However, not SaaS or software as a service. So if you're purchasing Microsoft Office 365 by the month or QuickBooks from Intuit by the month, those do not count as utilities. Okay. If you spent all of your money on qualified expenses, you will now have 100% of your loan forgiven unless you hit any of these 5 bullet points. So here's the 5 bullet points. Number 1 is the disaster grant. You could have received up to a $10,000 EIDL, disaster loan grant, for the COVID crisis, right? Not for a hurricane grant, but for the COVID grant. If you did, we believe that up to that $10,000 grant will reduce your forgiveness. Now, if you get a disaster loan, that's a whole different deal, right? The EIDL is a 30-year payback loan at 3.75% interest. That's a different deal. I'm not talking about that. I'm talking about the upfront grant money that came from the EIDL. We believe will be subtracted from your forgiveness. Okay. If you left any money unspent or spent on unqualified funds, that will be subtracted from your forgiveness on a dollar-for-dollar basis. If you reduced your head count between first quarter of this year and second quarter of this year, or between the same period last year and today, if you reduced your head count as measured by FTEs, that's full-time equivalent employees at 40 hours per week, the percentage that you reduced to that head count will be reflected as a reduced forgiveness in the same percentage. So that's a complicated math formula that you can see in my free calculator on our website, but just take it from me that you don't want to reduce your headcount during this period. You want to staff up, get back to full boat, okay? Hire as many people as you need to get back to full-time equivalent employees, being the same now as they were pre-COVID. All right. If you reduced any single individual's wages by more than 25%, that might be a reduction in your forgiveness. Now, this does not apply to anyone who made over $100,000 previously, but if you've got a salaried or even an hourly person who's working for less than $100,000 annualized a year, you cannot reduce their pay by more than 25%. If you do, that will be a dollar-for-dollar reduction in forgiveness. Okay. Finally, the 25%, 75% split. If you spend less than 75% of the money on payroll, then you will have a reduction in forgiveness dollar for dollar there. But that works out to the ratio of payroll versus rent and utilities, right? So when you're done, figure it all up. You cannot have more than 25% spent on utilities, put it that way. Very good. Finally, I just want to remind you to please document it. Document everything that you are doing, document your leases, document your bank payments, keep your bank statements, keep canceled checks if you do that, and just tuck everything into a folder. You are going to need it. And the one thing you will also need is the forgiveness application form itself, of course. Even if your bank gives you something else, go ahead and fill out the forgiveness application form. It's online now at sba.gov. Okay. Remember, your bank is key. You will use your banker will come to you to help you fill out the form and process your forgiveness. And this is at their discretion. The bank has full discretion to either approve or deny your forgiveness. So just remember that they're still in charge. I don't see any reason why they would deny your forgiveness if you've spent the money the way we talked about, but you certainly may run into a dork at the bank. There might be a few of those. Okay. So there are timelines. There are timelines set by the SBA. That is, you may apply after week number 7 of your loan. I don't see any reason to rush into this. If I were you, I would wait as long as you can. You must apply within 90 days of the end of your loan, so 8 weeks plus 90 days. And if you apply, then your bank must give you approval within 60 days of your application. That's a total of 5, 6, 7 months, right? From the day you got your loan, it may be 7 months until you get that final letter of approval. I don't think it'll take nearly that long, but that is the timeline. So I just have a little bit more, one more slide for you. If you are still in a dire situation, you still need more money, don't forget that both the disaster loan and the PPP are still available as of today. You can still apply for those loans if you haven't already. There's other debt relief programs available from the SBA, including 6 months of paid SBA loan payments. So your monthly payment on 7A and 504 loans are going to be made for you by the SBA. If you have either of those two loans, I hope you know about that by now. There are state and local programs. Visit this really cool website called covidcap.com for a list of other programs that might be available to you. There are federal tax credits. There are federal tax law changes. There are all kinds of tax things that you can deal with in April. And my favorite one is if you're still in a bind and you need to hit up your retirement savings, they have doubled the amount of the retirement savings that you can withdraw without a penalty. So you can now withdraw up to $100,000 from your retirement savings without a interest or penalties if you pay it back. And I haven't seen the exact rules, but in normal times the rules are pay it back within 3 years. Okay, very good. Here's my cell phone number, my email address, and an invitation to email or call me with any questions that you might have. I work about 7 to 7 days a week. So this PPP is keeping me busy, and I appreciate your patience, your questions, and your subscription to my YouTube channel or to our website to download the PPP calculators and other tools that we have available both on our website and through the links here on YouTube. I will certainly put the links below to our free PPP calculator and our free PPP loan expense tracking worksheet. Okay, that's a really good one. It's very simple, super simple stuff, but helps you stay organized. I hope you'll check it all out. Thanks. I'm David Worrell, your DIY CFO.